Markets rallied yesterday. Can they string it together? We'll talk about that on 3 minutes on Markets and Money. Yesterday, the markets rallied off of important support, and that was really important for markets to try to hold on to this kind of bullish trend that's been trying to develop now here over the last several weeks. And if we take a look at where the markets rallied yesterday, that was right off this uptrend line that's been developing really since those July lows. Markets had rallied very nicely to the 200-day moving average, failed at that level of resistance right there, came down, broke the 50 and the 100-day moving average. Now that was a little bit discouraging, and now that 50-day moving average, importantly, is going to be resistance for the markets in the short term. But importantly, we did, at least for the time being, hold that rising trend line. And that was encouraging, particularly given the fact we now have a rising trend with sell signals still in place, but we're now starting to kind of flatten out these sell signals as well, which may start to get us to the point if this market can kind of consolidate at these levels, try to give us a bit of a buy signal here that might give us another leg opportunity back up to around 4,100. We'll see if that occurs. The other good thing that happened yesterday, of course, is we also held support going back to these May lows, and that was also kind of holding that level of support. So we have really kind of two good levels of support where markets were holding yesterday. Again, we've got to try to hold that together. Markets this morning looking a little bit flattish at the open. We'll see kind of what happens today. Of course, we have the ECB coming out this morning talking about potentially a 75 basis point rate hike. Later this afternoon, we have both Neil Kashkari and Jerome Powell talking about Fed policy and what to expect given the upcoming meeting at the end of the month with the FOMC. Currently, Fed futures expecting an 80% probability of a 75 basis point hike in September. So that's just in a couple of weeks now. So again, that more aggressive language from the Fed and from Neil Kashkari in general may start to put a little bit of pressure on the markets later this afternoon. We'll see. As long as we can kind of hold yesterday's lows, that should be encouraging, at least in the near term. Jumping over to the commodity front, we talked recently about oil being on sell signals as well. And again, that is the case. We have oil oversold now and on sell signals, but most discouraging yesterday was the 50-day cross below the 200-day. So we now have a death cross in oil prices, suggesting that oil prices could go lower in the near term. From a technical perspective, there's certainly some downside risk here. Markets did take out this previous support, and there's not a lot of support right now. We have to go all the way back here to basically November of last year to those previous tops. So right around this $80 level, markets should try to hold on oil prices. A break below that, we're going to be coming down to test much lower levels in oil. Of course, this is all about the economy. As the economy slows, reduced demand, not surprising, we're seeing oil prices under pressure. That may alleviate here a bit as, again, oil prices are very oversold, but we would be looking for rallies back to around $93, $94 a barrel on oil to reduce energy positions, at least in the near term, until the technical picture improves. That's 3 minutes on Markets and Money for today. We'll see you next time right here at realinvestmentadvice.com.